Hey guys, welcome back to another Ask a CPA, and today's question comes from Mary in Miami, Florida. Mary asks, I own a small consulting business and I'm considering setting up a SEP IRA. Is this the best option? Well, Mary submitted her question through our website at askacpa.co. If you have a tax or accounting question, you can submit it through our website. Again, that's askacpa.co. If you're new to the channel, make sure to hit that subscribe button and bell notification to be notified of all new videos, as we come out with new videos very often and you don't want to miss them. Creating a retirement plan for your business is not only a great savings vehicle, but it can also create a huge tax deduction. In today's video, we're going to go in over and addressing the following questions. What is a SEP IRA? What are the contribution limits? Who is eligible to contribute to a SEP? What are some pros and cons of a SEP IRA? How to open a SEP? And what you can invest in your SEP IRA. Along with that, we'll also answer, we'll do a comparison between a SEP IRA and a Roth IRA. And we'll also do a comparison between a simple IRA and a SEP IRA. So what is a SEP IRA? So a SEP IRA is a basic individual retirement account, much like a traditional IRA. A SEP IRAs are for business owners and contributions are tax deductible. Investments will grow tax deferred until retirement age, and then the distributions, when you pull those out, will be taxed as ordinary income. What are SEP IRA contribution limits? So a traditional IRA allows you to put away up to $6,500 a year. That's for tax year 2023. For those 50 and older, they can contribute an additional $1,000. But with a SEP IRA, you can stockpile nearly 10 times that amount, or $66,000 for tax year 2023. However, SEP IRA's annual contribution limits cannot exceed the lesser of either 25% of your compensation or $66,000, the maximum SEP IRA contribution amount for tax year 2023. The first limit of 25% of compensation is also the limit for how much you can contribute for each eligible employee. The amount of compensation you can use to calculate the 25% limit is limited to $330,000 of wages for tax year 2023 if you want to hit that maximum amount. Employer contributions need to be made by the due date, including extensions of your federal income tax return. Now, there are no catch-up contributions at age 50 or older for SEP IRAs, so everyone is allowed to contribute to the maximum amount. So who is eligible to contribute to a SEP? So generally, SEP IRAs are best for self-employed people or small business owners with very few employees. Now, here's why. So if you have an employee whom the IRS considers as an eligible participant for your plan, you must contribute on their behalf. And those contributions must be an equal percentage of compensation to your own. So if you're contributing the max 25% for your own compensation, you must match that same 25% for each eligible employee. Now, eligible participants are employees who are at least 21 years or older, who have worked for you for at least 3 of the past 5 years, and have made a minimum of $750 for tax year 2023. For example, if an employee worked for you in 2019, 2020, and 2021 and made at least $850 each year, you would need to make a contribution for them for tax year 2023. Now, if you want to stash away 15% of your compensation for yourself, you must also contribute at least 15% of that employee's compensation to their plan. Now, employees will own and control their own accounts because of that rule requiring equal contributions as a percentage of compensation. A SEP IRA is generally best for self-employed people or small business owners with very few or no employees. All right, now let's go over some of the pros and cons of a SEP IRA. Let's start with some of the pros. So first, they have a very high contribution limit, so up to $66,000 for tax year 2023. That's huge. Next, they're very easy to administer. You can typically administer a SEP IRA by yourself through an online brokerage account. Next, the contributions are tax deductible, so including those made to employee accounts, which is great. So you can deduct the lesser of your contributions or 25% of compensation, subject to the compensation cap of $330,000 for tax year 2023. If you're self-employed, your deduction is the 25% of net self-employment income, which is great. So it's going to be tax deductible. Next, it's very flexible. So you don't have to commit to contributing every year. You can contribute 1 year and then take a year off if cash flow is tight, and then contribute again in the following year. So you're not required to make a contribution every year. Now let's take a look at some of the cons of a SEP IRA. So first, there are no catch-up contributions for taxpayers who are over 50 years or older, like there are with a traditional IRA. Next, there's no Roth version, which means you can't opt to pay taxes on the contributions now and then take distributions tax-free in retirement, as you can do by choosing a Roth IRA. Next, SEP IRAs require proportional contributions for each eligible employee if you contribute for yourself. Next, like IRAs and 401ks, SEP IRAs require a minimum distribution. Beginning in the year 2023, these must start at age 73. Also, like a traditional IRA, distributions before age 59 and a half are taxed as income and subject to a 10% penalty unless the reason for the distribution satisfies one of the early withdrawals exemptions provided by the IRS. Now, how do you open a SEP IRA? So it's super easy to open a SEP IRA account online. The first step is to choose an account provider. Then the IRS outlines 3 steps for setting up your SEP IRA. So first, you create a formal written agreement, and you can do this using IRS Form 5305-SEP or through your own account provider. Next, give eligible employees information about the SEP IRA. So you can give them a copy of IRS Form 5305-SEP or get a similar information through your account provider. And the final step for setting up a SEP IRA is to set up a separate SEP IRAs account for each eligible employee with your account provider. So what can you invest in through your SEP IRA? So once you've opened your account, you can choose from the investments your account provider offers. This selection typically includes stocks and bonds and mutual funds. It's possible to open an IRA at a bank, but generally you'll be limited to investments like certificates of deposits, which usually offer a much lower return than a diversified portfolio of stocks and bonds. Now let's do a quick comparison between a SEP IRA and a Roth IRA. So both a SEP IRA and a Roth IRA offer tax benefits when you retire. The main difference between a SEP and a Roth IRA is that a SEP IRA offers tax-deferred growth on your investments, while a Roth IRA gives you tax-free growth and withdrawals in retirement. Now, contributions to a SEP IRA are tax deductible. You can't deduct contributions you make to a Roth IRA because you already pay taxes on that income. It's going to grow tax deferred, and then it will not be taxable income when you take that money out. Another major difference between a SEP and a Roth is that you can include employees on a SEP IRA and make contributions for them. Now, you can't do that with a Roth IRA, and they may be better for self-employed individuals for that reason. Now, SEP IRAs will also have a much higher contribution limit, up to $66,000 for tax year 2023, while Roth IRAs only allow you to contribute up to $6,500 in the same tax year. The bottom line is both accounts can be suitable for business owners. It's just that they have different types of tax advantages, and SEP IRAs may be more suitable for companies with multiple employees. Now let's take a look at a simple IRA versus a SEP IRA. So a simple IRA, or savings income match plan for employees, is a retirement savings plan for employers and self-employed individuals. Some of the eligible requirements include having no more than 100 employees who earned at least $5,000 in the previous tax year. The main difference between a simple IRA and a SEP IRA is that only employers are allowed to contribute to a SEP IRA, but employees can also contribute to a simple IRA through their paycheck via elective deferrals. Another core difference is that simple IRAs employee contributions are limited to $15,500 with a $3,500 catch-up for those 50 or older in tax year 2023. The SEP IRA contribution limit is up to $66,000 for tax year 2023, so there's quite a bit more you can contribute to a SEP IRA. Now, SEP IRAs are great retirement vehicles for self-employed individuals who want to contribute large amounts to retirement and who have no employees. If you have employees, consider a traditional 401k or perhaps a simple IRA. And that's it for SEP IRAs. I hope you found this video helpful. If you did, consider hitting that subscribe button down below, and we'll see you guys in the next video. Take care.